Hey everybody, this is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. Good afternoon, everybody. Happy Monday. So I just barely got back from Nevada and had a nice time seeing some family. And yesterday Sunday, Bitcoin had a sweet rally. So awesome. I was so happy to see that close. I was like, anybody mind if I pull the car over and scream like a little girl? I'm just kidding. It was pretty cool. It was nice to see a nice rally, and it will impact the future of the market. So it's going to be fun to kind of talk through all of this today. So just real quick, just because the S&P closed not long ago, this is what we look like. So the S&P has outperformed Bitcoin several days in a row now. Some people think this is a good thing because if Bitcoin stops tracking, move for move, I mean, it's pretty close. I mean, every shape is similar, but some people think that if we can break away from moving exactly, that Bitcoin might have a chance to do its own thing. But you can see there's a lot more green than there is in Bitcoin on the S&P. But these moves here are really, really nice. Even though last Friday the S&P had a really strong green day and Bitcoin was in the red, over the weekend Bitcoin made enough ground that by the time the end of the week happened, they were pretty much in parallel. So the fact that Bitcoin's a little bit down today is not the end of the world. We still have a little bit of trading time left on our day. So let's look at the daily and really kind of dig in to what is going on. So quite a while ago, I pointed out this descending triangle, and the day that we broke out and had this candle here, I tweeted out that crypto was about to go boom and that I was very excited because we finally broke out of the side of this triangle. And then for 3 days we went down. Everyone's like, yeah, nice call. But it's true. Like, when you break out of a triangle, it doesn't mean that it goes straight vertical for 365 days. It has to still adjust and go through the motions. And what we managed to do, which is extremely bullish, is we came down, found support on that giant line, and that's the best case scenario. You want to have support on a huge resistance. And believe me, this is a huge resistance. 6 months, never crossing a line, and you finally just barely take your first baby steps across that threshold. It took, it was really healthy for us to come back and find it as support. And where our trading range crossed that line, we managed to get a nice long tail of support and a green candle, which was our reversal. So this reversal candle right here gave us a couple of days, just like what we were hoping for. And yesterday's close, it did not break the red zone, so we're still in the red zone, but you can see that we are visibly, it's close, but it is visibly higher. We had a higher close than this, which means we're having a tiny broadening formation happening. And, that's so far. If this is a broadening formation, then our next our next close should be up here somewhere. So we are starting to get into the higher 19s. So why would that be a good thing? Well, because our 50-day moving average is like right here. So getting out of the red zone and staying out is the goal. That is what we're trying to do right now. And we still have 3 hours left on the day, but this candle looks fantastic. If you're going to have a red day, this is the type of candle you want to have, because the short-term goal is we would love to stay above the 20. If we can get above the 20 and stay there, that will be massively bullish. And then after establishing the 20 as support, breaking the 50, and it will be like, this is going to be a big move. But again, back to this descending triangle, you can only count this as a descending triangle for so long. I mean, let's just pretend that other technical analysts were like, you know what, I'm on the fence. I'm on the fence whether we broke out. This is questionable. What would they do? They would move the point to the top of this. Perfect. Did we break out? Yeah, we still broke out. And that was because of yesterday's candle. There's no confusion here. Anybody that is looking at this descending triangle, they all have to agree that it's been invalidated, that we broke out the top, not the bottom. Can we still go down? We can. I mean, the markets will do whatever they want, but this formation, like the fears of the descending triangle, they are no longer valid because we broke out. And I believe we broke out back here and found this as support, which I believe that I'm correct on that analysis. Let's pretend that someone's like, no, we're still in a descending triangle, and this is our new this is our new triangle. Let me tell you why this is not correct. In order to have a line, you need 3 touch points. This is not a touch point. This is not a touch point. This is not a touch point. There's no touch point here. You can't just draw a triangle with 2 touch points and say that this is it. It has to touch at least 3 points to be a valid line. Therefore, this is as generous a line as you can get, because at least we have, I mean, this is close enough that you could count it as 1. This is 2, this is 3. Well, 4 starts here. 1, 2, 3, and 4. And then finally we had this and then breakout here. So every technical analyst on earth will say that Bitcoin has broken out of this, which is so awesome. This is good stuff. This is very, very good stuff. And the sideways consolidation now is even more validated because of this choppy action that's happening to the right. So what happens after a really significant drop and sideways consolidation? If the consolidation slopes upwards, it's going to break and come down. If the consolidation slopes slightly downward, which is pretty much what I'm looking at here, it is most likely going to break up. Either way, the downward momentum that follows this line, our average best case scenario of highs, we are no longer being repressed by this downward motion. Now it's less down. It has to be either sideways or start building up. And believe me, enough eyes are on this thing that it's not going to take very much upward momentum for people to get excited about it, and they will pile in and it will feed on itself. We're looking at this break here, I believe, was the start. Like, this was the big move out. And this candle here, best case scenario is we can close above 50% of this giant green candle here. We're there now, but it would just be amazing to close. So really, if we just close above the 20, that's practically all we're trying to accomplish. So Bitcoin looks really, really, really nice. Ethereum is doing just as well. Look at this candle. We're building a beautiful. I mean, it could be a dragonfly doji by end of day if we can stay up here. Either way, this is a beautiful support candle after this. And look at this close. If you get a little bit, scientific and get really down in here, you can see that our close yesterday was higher than this. We are starting to break out of this sideways consolidation on Ethereum, which is extremely bullish. And having some support the next day and then starting to move into upper ranges. Boy, get ready for some nice green days. Like we have some ground to make up, and that can happen very quickly. As you can see this flickering between red and yellow right now, and that's because the 100 has been sloping upward, and now it's starting to slope downward. Our last data point on the 100 is here. Pretty soon the 100 is going to start moving up into these higher ranges, and we'll be in a red zone. So what that also means on Ethereum is that we might be breaking a red zone in the next few days, which would be, it's a higher probability trade than exiting the yellow zone. So both of those things are really, really nice. It's just interesting, you have to really stick to your gut, because the news and the general consensus out there is usually wrong. And if you were to listen to the news and make all your trades, everyone would be short and everyone would be bearish. And that includes the S&P. Like, it's really interesting how when we got down here and things were going down, all of you that have been following and listening, you've all heard me saying that we've got probably 2 weeks to a month of upside. And I believe that is still true. And in fact, moving from 356 to 378 on the SPY is a pretty big move. And our day here today, we closed higher than we have since September 21st. It's been a month. This was our highest close in a month. If you just if all you did was listen to the news and went bearish, you would be upside down on any short trade in the last month. Kind of crazy. And so you really, it's kind of cool. Like it's neat that together we're kind of working through this and kind of keeping our emotions at bay and looking more at the numbers. So speaking of those numbers, I have updated my S&P AI predictor, and so this is our new data point right here. And so with this data point, we have our down and we've got our chop, and now we're moving a little bit up. And our most similar experience was February 22nd of 2016, and this is the chart. You can see how it is very, very close. That's a pretty close replica of what we are seeing. Obviously, this doesn't tell the future. All it does is look at possibilities, but it's kind of fun to run through the possibilities because the shape of the chart will produce metrics, and those metrics go into indicators, and bots and professionals, they all look at indicators and they will make decisions based on those indicators. So this AI is simply kind of cutting through a lot of that and saying, well, if the professionals that looked at the same indicators back in a time when then the market was doing a very similar thing, made these decisions afterwards, perhaps they'll make those same decisions again. I know there's a new climate. I know that there's some big numbers coming out, so there's going to be some variables and some question marks out there. But it is interesting how, as horrible as the bad news was in the last month, for us to have the highest close in a month is pretty amazing. That means it feels like we're onto something, right? So here are a couple of other scenarios. So I'll just kind of cycle through them. This one actually looks fairly decent. This one looks pretty decent as well. This one shows short term we'd be down, but even in the medium term, we're doing pretty well. Then there's this one. We're cooling off for a week, and then it's fairly flat, but still a little bit positive. There's just a lot of cases where we've done something similar, and we're moving out to the upper side. The bear scenario is this, but even with the current shape of our chart, it's still a month away before things really start getting rocky. And so that's interesting to think about, you know? I mean, it's almost like the news works against you. It doesn't help you. So there were two experiences that were pointing to 2008. But yeah, all these other cases look pretty strong. This one's weaker for sure, but now we're getting pretty far away from a pretty exact match. So our closest match is here. So that's interesting. The only reason I even look at the S&P is because Bitcoin has been following it. Obviously, today that's not helping us a lot. I mean, we're up 1.2% on the S&P, and Bitcoin's currently down 1.2, so it's almost a mirror. But certainly, a green S&P is going to help Bitcoin more than it's going to hurt it. So that's why it's still worth looking at all of these things. So that is our S&P. Now let's take a look at Bitcoin. So Bitcoin, we were in this kind of, last time we talked, the chart looked similar to this. There was kind of a 50% chance that we were going to really drop off hard. And there was also a 50% chance that we would really, really be strong. And so what does today and yesterday's action change? Like, what did it make any difference in some of the projections? Because as we get new data, it kind of gives us a new story, right? Because if the data that comes out matches exactly what we've already seen, then those bearish cases or whatever, the prior expectations would be in place. But as things play a little bit differently, the shapes of these charts change, and especially where there's a lot of emphasis in the most recent price activity, it can change things a little bit. So where we left off, at least on Saturday, was that this is our closest situation. So it was pretty bullish. But our two bearish ones were next. So this one says we're quite a ways away from the cliff. But this one says that we could start on it at any moment. This is not a good chart. And for this to be our third closest historical here, it's hard to see it line up perfectly because the scale is very tight right here. But this is not good to see, right? You don't want to see that, oh, this pattern's matching up perfectly with 2018, like 5 days before we dropped off a cliff. It's not the most bullish scenario. And there were quite a few bullish scenarios. So as we've gone through this day made it so that it was no longer 50-50, that it was more like 25-75 based on, what could happen. It's just that the two of the top three most likely scenarios were bearish. So we're still not fully out of the woods. So let's do this live since it'll just be fun. Let's go to Bitcoin and say, all right, let's just pretend like the day closes here and we'll see what happens. Because if there was a move here and then suddenly we dropped off or something dramatic could completely change our outlook. But we'll go with just our current numbers and see what it would look like. So I'm just going to go to the data here. And you can kind of see how I update this. Not that you need to know, but all I'm doing is just adding another data point. And I don't need all the data, but I'll just put it in anyway. So I need our open, which is 19,567.9. I need our high, which so far is 19,605.9, low of 19,157, and then our just our current price. So I'll just put it right there. And then with that data in place, I'm just going to go and click update, and we will see what changes. So if this was where we closed, and that's still happening in 2.5 hours or whatever, but the shape of our chart is moving a little bit further north. This low feeding up to these most recent bars here, it's starting to move to more of a bullish scenario. So our yesterday, this was the most like event, and now it's the second most like event. But the first is still the same time frame. Very, very curious. Now all of a sudden, our AI is predicting more bullish outcomes. And it's because of these few data points. Like these, I'm telling you, this is so bullish to establish a bottom and then start attempting breakouts of these triangles, and then reinforcing those breakouts. Man, it won't take much more than a few green days before we start testing some of these, and people are going to get like, this is a great situation. Like, these are good numbers. The one that still haunts us is number 5. So number 5 is this scenario. And so these things can play out. I still, in comparing 2018 and our current situation, you can see how there's very few long tails. There's a long wick here. There are some wicks here, but you can see how everything traded very tightly. Like, the closes and the opens were really next to each other. And our current experience is really long. Like, you see a lot of support and a lot of resistance. There's a lot more emotionality in here. And so where here people were asleep and then bears just surprised everyone, we've had attempts at falling. We've had attempts at pushing out. And there are people watching this. Nobody's asleep. So every move will eventually climax into either an explosion to the upside or an explosion to the downside. But I just feel like the structure of the chart is more bullish than bearish, and the bearish cases have been bought up. So there's a lot of big money that is interested in Bitcoin right now. So anyway, that's just kind of some of the things that I'm looking at. But now we're at the AI is predicting, just from the current information that we have, like, it's 9 out of 10. Like, it's 90% of our top 10 are extremely bullish. You can see it in the numbers here. Like, there's a lot more green outcome than our really bearish outcome. So, take that for what it's worth. I mean, this is not a 100% guarantee that markets are going to behave a certain way, but it sure does inform us, and it's very interesting to see how the markets have played out. Going back to the raw chart, this is a breakout. It is a breakout. There's nobody that can say we are being squeezed in this triangle anymore. Like, we're on the upper side of it. If we go back down? Yeah, but it'll be a different formation, because this triangle is invalidated. So yeah, like I mentioned a long time, like when we broke out, I said, I'm going to leave this triangle on our chart, because we're going to point back to this and be like, this was the move that got us out. And I really think that it's still the move. So anyway, very cool. Yesterday, a lot of alts had a really nice day. Anything in the red zone, we're still waiting on. Lots of coins in the red. And from a trading standpoint, we are waiting patiently. We're not interested in buying in. We're not averaging in. We're not buying anything that's in a red zone. We we love red zones because it gets cheaper and cheaper and cheaper and cheaper. And finally, when we get a buy signal, our upside, our risk reward ratio is just way, way, way higher. It's just way, way higher. And so we're waiting for that chance to get in at the right time. But there's a lot in the red zone, and a lot of coins that were showing more strength, they all look like this. Pretty ugly. But we don't care. Let them sell as much as they want, because when they finally break, it's going to be a lot of fun, and we're going to be in a position with liquidity to take advantage of those moves. The yellow zone is getting smaller and smaller because most of the alts are showing signs of weakness. The coins that we are still in, they look remarkably strong. Like this one doesn't look super strong, but Matic looks really nice. Aave is a beautiful coin to be in right now. DYDX is showing a lot of strength. Like, just look at the coins that we are long. They are all looking pretty strong. Maker's having a little rough one, but yeah, these are the types of coins we want to be long in because of their structure. And anything that's looking pretty sad, we're trying to exit if we can. If not, we'll just be patient and figure out a solution to average in at the right time. And that's what my pro channel is all about, teaching you how to stay in the ones that you want to be in and mitigate risk and deal with things going against you on the other side. But overall, it's very, very exciting. The last few days of movement are very encouraging. Obviously, we're not out of the woods yet, but man, it only takes, I'm just waiting for this final break of the red zone because the 50 is flattened out, really flattened out. And in fact, it'll drop after these days exit our average. But the 100 is completely averaged out, and our 200 is finally at it's moved past our 40,000 zone, 47,000 zone. So the 200 is going to start leveling off as we remove some of these higher higher prices from the average. And so if we get all three of these leveling off, man, it's just a recipe for a bullish explosion. So this is pretty fun. Very, very, very fun for all of us nerdy types that really like to watch and see how everything's playing out play by play. But anyway, it's pretty cool. We'll keep looking at this and keep analyzing and try to stay one step ahead. But yeah, if anybody's interested, I invite you to join us on the Pro channel. It's pretty cool. All right, other than that, we will catch you all tomorrow. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.